Thanks so much for tuning in to Talking Point. I'm your host, Neeraj Shah. There's lots that the world equity markets have to grapple with this time around, though that has never been the case otherwise. But more so this time around, simply because the quantum of news flow, both on the local and the global front, is enormous. From if the taper and the interest rate conversations were not enough, now we have a lockdown threat looming in the US. Evergrande continues to remain a problem area for people looking at the Asia Pacific region. And back home, we are looking at the start of the earnings season, the MPC meet, and more. To talk about all of this, both the global and the local factors combined, we have today Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, great having you. Thanks so much for joining, and I hope all is safe in Singapore.
It is. Good morning, and thanks for having me, Neeraj.
And the pleasure is ours, Rana. So, Rana, can we start off with the zooming out and looking at the global landscape? Maybe start with the US. Do you reckon all that's happening in the US is noise for the equity market, or could some of that translate into something that could meaningfully impact the equities?
Right. I think US among the developed markets, if you look at the vaccination trends, reopening trends, of course they go a bit up and down depending on the Delta variant COVID how it's spreading. But our sense is that US in terms of reopening is the most advanced. And once the Delta variant, it looks like it's peaking out in US a bit. In that case, I think US the recovery that it will experience is quite strong. Having said that, I think this year in CY21, US GDP growth will peak because this kind of growth is not sustainable. But I would emphasize that a peak growth will not mean weak growth. Next year, we expect US to grow at a pretty healthy pace. It's a $20 trillion plus economy. Even if it grows at 4% and thereabouts, it's going to be a pretty healthy growth rate. And that will have implications for the emerging markets. We can talk about that more later, but what I would like to highlight is that in case of when you think of emerging markets, the emerging markets with trade linkages to US and having their own domestic economy doing well will do perhaps much better than the other emerging markets.
Okay, we'll get to that in a few moments, Rana. Can I just dwell upon whether you believe Jerome Powell was on record yesterday saying that if inflation persists for longer, and it is looking like it is, but if it stays strong for too long and too strong, then they might even act on rates, etc. I think a lot of people, and maybe most of the market, has segregated the taper talks from the interest rate actions, and believing that the interest rates will be a lot more measured as opposed to how strong and quick the taper would be. Do you think either of the two have the makings of roiling equities in any fashion whatsoever?
So I think the taper is now already all but announced, and that is in line with the market expectation, starting somewhere in November, December, continuing for 6 more months, and then finally ending. So I think that is understood, priced in, and people are positioned. However, as you rightly pointed out, Neeraj, people are expecting rate rise to be a later event. Now we will have to watch and carefully what happens next. But we would like to point out the current inflation numbers that you are seeing, whether it's transitory or structural, that debate will go on. But this is happening due to one of the major reasons, supply bottleneck, and that we experience. We can go into detail, but supply experiencing due to container unavailability, the China power shortage, the COVID disrupting supply chain in Asia. So all those reasons. Interest rates, is it the right answer to that? I think the policymakers will have a long and hard think about that. But I think markets, as for now coming to the market, what can create some sort of pressure on the markets? The markets will look at real rates. If the real rates were to rise meaningfully from the current levels, then I think as a equity, which is a growth asset, that can face some sort of pressure. But our sense is that the policymakers will be watchful. They also understand all those reasons. So therefore, on the rates side, we will expect still rates rise to be an event which will be later.
Okay, so you would keep a keen eye out on real rates, and if they were to rise back in the US, then you might actually see. You believe we might see equity outflows from EMs as well?
Okay, so on this case, this is the EMs in the past. They always treated like asset class, a single asset class. They are having inflows and outflows together. But if you watch carefully the flow trends, for last few years, that trend is now not holding any longer. While few emerging markets are facing outflows, some are getting inflows. So I think there is people are looking to invest into the markets where they can see some reform, where they can see long-term sustainable growth, and where they can see some sort of trade linkage actually benefiting those markets. So those are the markets that can still get inflows, albeit the extent of inflows can vary according to the global cycle and whatnot. So I would say that by and large, yes, if you talk about in any emerging markets, by and large, they tend to be, could be a little bit cautious. But having said that, I think investors will distinguish between emerging markets from here on.
Rana, to your mind, from where you are sitting in, how strong is this conversation around China plus one, and therefore how does it translate for India, especially in light of the Evergrande situation? I mean, there's a lot of loose talk about whatever is getting impacted in China, the Indian companies will benefit. It obviously doesn't work out like that, but largely, in your experience with companies, with money managers, and your house as well, how is this whole combination playing out?
Look, what is happening is China is obviously very significant, and I will just perhaps get to the first core of the issue. I think there is a conscious attempt from the Chinese policymakers to move the economy towards more innovation, more in distribution and green technology, and so on and so forth. So the approach that worked in the past decades, like buy debt and build and produce and manufacture, perhaps not. Perhaps we're going to see some changes to that approach going forward. Now, that is one part. Second part is that COVID has disrupted supply chains meaningfully. As you can see, supply shortage almost everywhere. So the multinationals who were so far focusing more on efficiency, they were having supply chain all over the world. Now that is getting significantly disrupted. So therefore, in our interaction, we see a strong urge to reshape the supply chains, some of them to bring back onshore, drive automation, and also to whatever extent they outsource, diversify among emerging markets and not just one particular market. So our experiences tells us that the corporates in the developed world will do a combination of all three.
Got it. Yeah, and which has been the narrative thus far. I was just wondering if because of this whole moves from China, be it to target the online economy, casinos, now this whole power outages, does that aggravate, exaggerate, strengthen this whole move of lesser dependency on China as a supply chain hub? And therefore, does it benefit a country like India, for example?
I think that the diversification out of China started some time back, and that is not nearly even before COVID, because even before COVID, when China started, in fact, if you recollect, somewhere in 2017, 2018, China came out with a policy document called Beautiful China, essentially to reduce energy-intensive productions like polluting chemicals and whatnot, and move to higher value-added chemicals. The trend was in place since then. It got further accelerated with COVID, because COVID has been a big shock to everyone, and everyone relooked at the supply chain. And the current what is going on is less to do with supply chain, it's more to do with fixing the imbalances in their own, what they perceive as imbalances in their economy. But I think this trend has started, and ongoing whatever what you referred is only giving more let's say more momentum to this ongoing strength.
Okay, and Rana, you reckon that this is not only linked to the Winter Olympics? You think this move from Beijing has legs beyond? As you said, they came in 2017-18. I'd missed that detail, but since you brought it up, you reckon this is not just a Beijing Olympics led thing? It could.
Oh no. If you certainly not, because if you link at all the policy that came out of China, Beautiful China came out somewhere in 2017, 2018, with a focus on reducing production of polluting industries. Then sometime last year, it came the policy called dual circulation, which means in effect more focus on domestic consuming economy. Now, if you look at the very recent regulatory measures on education, housing, online gaming, it's all focused on, education, housing for a middle class is the biggest cost component, right? And their income level were dwindling because the prices were so high. So the policymakers are acting on that. So I think having a moderate, having economy with a moderately growing more middle class economy, more middle class people, along with focus on innovation and green, is their driving force for their economy. It is just not about Beijing Olympics.
Got it. So how do you then contextualize what could happen to, say, the India growth story over the course of the next 2-3 years in light of all that we've spoken about thus far? Because valuations seem very expensive by historical standards, but a lot of bullish people say, don't look at history. This is a bit of an unknown thing. But haven't we heard that in the past?
No, we have heard that in the past, but again, we always have to be, look at what's going on carefully and analyze. Of course, we can take certain cues from the past. Now, obviously, if you look at the valuation of Indian equity markets on the headline level, it is trading at a fairly high level, and the premium to emerging markets have also expanded. That has also happened because some of the other emerging markets corrected much more. India did not. But now let's look into whether this valuation premium is warranted or not. If you look at the country's own dynamics, right? Again, just like I spoke about some of the structural reforms in China, which is going on with certain results. You look at what happened in India since 2014, 2015. First started the effort of formalizing the economy through GST, and then the 4G network came. Now that is giving rise to a digital economy. That is driving productivity on one hand and government's tax collection on the other. So you see how much the indirect tax collection has grown in spite of the COVID-related hit. That is addressing the fiscal situation. I can't recollect when was the last time India's tax collection was ahead and expenditure was lower. So that's number one. Number two, also you would have seen systematically the policymakers are addressing the domestic manufacturing. There is tech duty cut, then there is duty increase, there is tax cut, and then there is production-linked incentive schemes. As a result, what we have seen is that exports are rising, imports are coming down. So that is why all the crude is at 80. You have current account deficit at about -1%, which we all know India will receive much more inflows than that. So BOP is strong. So if you put all this together, and although I would also highlight that in spite of crude being at 80, inflation is still below 6%. It might rise a bit, but it's still pretty acceptable level. As a result, if I were to summarize this, I would say that deficits are falling, savings are rising, productivity is improving as seen lower inflation number. What does that mean? That sets the stage for longer term sustainable and good growth, which will lead to good earning growth as well. Now coming to the stock market as such, how do you play it? Overall, we expect earning growth to be strong. And now, but what valuation do I pay for it? If you really drill down the valuation expansion has mostly happened in consumer discretionary and certain IT names. The domestic cyclicals, which are supposed to benefit out of let's say a stronger or more robust economy, whether it is banks, whether it is capital goods or financial services or even autos, they are frankly not that expensive. In fact, they are, I would say, reasonably valued, contributing to the opportunity for them.
Before I get into some specifics, Rana, is it safe to assume, therefore, that your bent of mind is to try and focus on where there is growth at reasonable price as opposed to strong growth but highly priced?
Yeah, so we will look at growth and where we believe that growth is reasonably priced. Yes, that's right.
Okay. Now, before I get to what are the pockets that you like, I just wanted one quick, and it's a wide bucket, but I would love to understand how you sitting out there, perched out there, is looking at it. There are a bunch of government moves linked spaces which already have come into the limelight or are probably going to come into the limelight very shortly. I mean, we've seen from policies which impact a small pocket like sugar and PLI to this whole auto chemicals related moves, etc., that have been done. The defense procurement now seems to be increasingly happening onshore as well as much as offshore. Which amongst these whole set of government moves that have happened, and there are a bunch of them, so I'm putting in a bit of a spot, but which amongst these have you liked the most and you believe is the most sustainable earnings growth trigger for that particular space?
Okay, so before I go there, I think these initiatives will overall drive the reform and the economic growth and earning growth. Now the capture is how do we capture it, right? And also some of these will get captured by multinationals who have operations in India. So they may or may not be listed. So to that extent, you can't play it. There will be some, captured by companies who are not listed, maybe Indian companies. So therefore, you have to be careful where can you capture these opportunities. Or there may be opportunities, for example, let's say defense. A domestic company is doing defense in their, let's say, promoter or private company. They 2014, along with a good quality telecom network, along with the online, the banking thing getting online. I think in the digital economy space, there are enough number of opportunities. And when I say digital economy, I do not only mean the apps or the super apps. That actually is opportunities far greater. For example, let's say a consumer company using digital technologies to streamline their supply chain. They are reaching, let's say, to every dealer, distributor through some digital technology and managing their inventory in a much better way, thus driving productivity. So this is a very large canvas. This is just not means one app or two apps or something like that. Obviously, they are also part of this. I think the commercializing, or let's say the including the Kinara shop in the in the supply chain, the grocery delivery. All these are big opportunities. Another opportunity comes from there. This digital economy is that think about a Kinara shop. In the past, they would get their assortments all mixed up, supply chain not in place. Now, if they become a part of a bigger e-commerce initiative, then you not only that their business gets better, you get a lot of data on them, and they suddenly become bankable customers. So the banks who have invested into all this data mining and all that, I think for them also opportunity is huge. And there are just few examples in the digital. The second bit is in the manufacturing. I think manufacturing, the reforms that we have already spoken about, in terms of specific, the three areas, I think auto engineering goods looks very promising for India. Then chemicals look very promising for India. And electricals and electronics have been looking promising for some time. In all these three, India is gaining significant market share. And this relates to the China Plus One and the companies diversifying their base that we are talking about. We do see the companies in these areas receiving substantial inquiry from the global clients for producing in India. And also, some of them who have operation in India, they're also collaborating with these domestic manufacturers. So I think this is the second thing. The third, the emerging theme where we also are doing more and more work to understand is going to be the electrification of two-wheelers. Now, again, there also I think there is going to be a big opportunity, and the PLI schemes are out. We are also going through details of it. But I think in terms of the two-wheelers, the production of electrification of two-wheelers, supplying kit, then I think over a period of time, moving into higher value-added activities within that EV chain will also create value. So there are three broad areas that we see are direct beneficiaries of reforms.
Okay, just one quick follow-up, Rana, and then that is on our two-wheelers. Before I have one more question, but the common belief is that incumbents will get challenged, their profitability will get impacted because the new age companies, and Ola is a shining example of the pricing point that they have chosen to launch at, and they have scale as well. The incumbents could actually come into a bit of an issue, even if they were to have large-scale electric two-wheeler manufacturing. Is that something that you second, or are you in a wait and watch mode?
So I think on this, we have to go sector by sector. What you say about two-wheelers, I think is by and large, we would agree with that view, but that cannot be said about every other industry that's going to get disrupted.
Yeah, sure.
In many industries, you will see that the incumbent player has taken the lead and introduced all this technology and adapted themselves. So I think we have to really go sector by sector. The disruptor will necessarily eat into the incumbent share is not a given across industry.
Yeah, sure. I was only referring specifically to the two-wheeler space.
Specifically two-wheelers, yes. I think the way Ola have priced their two-wheelers, it will give rise to disruption and a lot of competition. But this is good. This is creative destruction. This is good.
Yeah, it is good for sure, and it's good for the consumer as well, by the way.
Yes.
Just last couple of questions, Rana. One of them is on this whole bunch of tech-based companies coming out with their IPOs and becomes a really large sector very, very shortly, maybe in 2021 itself. What are your views here? I mean, the debate around how richly valued or undervalued they are, depending on the time horizon you have, is very, very large back here in India. What are your thoughts?
So there is no doubt this consumer tech, or fintech, or health tech companies will come at a pretty significant valuation. I think there is, but in spite of that, what we think or is going to happen, there is enough demand. The reason being is that I think the market is large, so the growth promise holds out large, very, very large. From a demand supply perspective, in regional global investors were big time overweight on, let's say, the consumer tech or the fintech or health tech in other markets, including China. But given the regulations out there, the way it has played out, they're also looking for alternative emerging market tech play, and India is a very large market. But that's from demand side perspective. On our view, again, we cannot take one simple view for all the companies that are coming for listing, because in these businesses, the winner, the first or the second guys will garner a lot of share. The third, fourth may not be. And that's how these businesses operate throughout the world. So here, while we are excited about the space, we need to do, and everyone has to do a lot of bottom-up work to identify what they think is going to be the winners. And that will typically depend on the platform effect. Whoever is able to cross-fertilize and use what they have in a much more efficient way, so that the cost of doing business goes down and the operating leverage finally kicks in. So I think that that use of the platform, use of the data mining is going to be the key.
Okay. My final question, Rana, and that is on the PSU space. Long ignored, and maybe for all the right reasons, there is some noise around that. Divestment may be one thing, but just the government moves to procure a lot of stuff indigenously is also bringing some bit of fire here. Are you guys who manage global money looking at PSUs at all in a meaningful way, or is it some time away before you start taking a look at them?
So again, we do not look at anything as a pack. We are more look at everything as a more of a bottom-up approach, right? So I think let's say even let's look at the PSU, where the PSUs are very prominently present in like the banking sector. There also we do not take one view on all PSU banks. The largest bank operates pretty well. Others, are facing some sort of challenges. So it will depend on sector by sector. Having said that, I think defense is one sector where I think the promise looks pretty good. We will have to see how exactly that plays out. But overall, this policy of procuring more domestically, having business for those companies is a good thing. The second thing I would like to highlight is that even the Indian domestic companies are also focusing on environment and social concerns in a very big way, right? For example, the focus on renewable power, the focus on cutting emissions. These are very good things because I think that those kind of activities kind of brings them back into a lot of investors' radar.
Rana Gupta, it was a pleasure talking to you today. Thank you so much for spending the time. Wishing you a great afternoon and stay safe.
Thank you. You too.
Thank you. And viewers, thanks for the talking point.